The following program contains views that are not those of WVTC, iNetworks Communications, their subsidiaries, affiliates, or financial supporters.
Hey, it's Brian Sewell and Alita Anderson back on with the Mortgage Doctor Show. So glad to be back. I hope everyone's doing well. Here, please share. We're going to talk a lot about building wealth through real estate. Alita, how are you doing today?
I am doing wonderful. Enjoying this nice sunshiny day. No complaints. How about yourself?
I'm good. I'm trying to boost our thing up here. It's not updating for me, but that's okay. We'll get it. So yeah, I'm doing great. So guys, go to WVTC. I think we're on now. Let's see.
Here. Type it.
Here, WVTC. There we go. And then just share.
Yep. That's it.
Okay, sorry about that.
There you go.
Cool. So make sure you guys share this with your groups. We're gonna have some fun with this. So again, glad to be back. We took a little sabbatical for a while. It's been a long while.
It has been.
So first show, we're going to knock out the rust. We're going to give you a lot of good information. I know a lot of things are going on in the real estate market. People are getting nervous about different things. We're going to bust some myths and give you a lot of good information. But I will tell you that, to me, buying a home is one of the biggest decisions you can make as far as building wealth. And the reason for doing this show and the reason coming back and doing the show is to educate, encourage, and empower you. Those are my 3 E's. They never change. The encouragement part is that people get down and out. Sometimes they've been told no by different people or different banks, or they're not looked at with care. The education piece, I think, is just as important, because at the end of the day, if you don't know the facts, you don't make good decisions. And we're going to share some examples and give you some information about that. And I believe education and encouragement give you empowerment to make really good decisions. So please share this information. We're going to give you some good information. We're going to hopefully, after you listen to us, that you're going to come out better. And we will share some programs later on. Alita, how you feeling today with this nice and warm, sunny day?
Good. You know what? I always love the summertime because running around showing houses, I don't have to take off a hat, a scarf, gloves, jacket. I can just jump in and out of the car and see more houses, which is good because I've been seeing a lot of houses lately because we have such a low amount of inventory that my clients have been seeing. There are more houses than we typically do, just to find the one that they want.
Yeah. And for those that sit on the fence and say, hey, we're waiting for this bubble to burst, which I'll explain for a few minutes why I don't think that's going to happen. You know, what do you tell
them? We kind of look at it because when people say, you know, I'm waiting for the rates to go back down. Okay, you're waiting for the rates to go back down. You're waiting for more homes to come on the market. What does that cost you? And you've actually helped me with this with the numbers. When we go through it, if you look at, let's say you go in and get a house now, and the rates go down. What can you do? You can refinance.
Right.
But you have a house. There's so many different factors other than just the cost and just the interest rate. And that's the part we're speaking of education that people don't necessarily take into consideration. And I probably wouldn't either if I wasn't in real estate. You just, you don't dive that deep to know all the things that are behind the scenes that actually, what does it cost you to wait? And people don't realize what that number could be.
So I'm writing that down so we make sure we address it. The cost of waiting, it can be quite costly. So the thing is, and I feel like I've been busting myths all week or last week, and this part is so important, is that a lot of people want to pay cash for everything, or they want to pay all their debt off first, because, you know, we follow Dave Ramsey. I'm a big believer in him. But his situation is quite different, right, than a lot of others. He's got a couple extra zeros behind his name. I do believe the way you build wealth is through real estate. You start off by getting real estate if you're paying rent. Now, if you're living at home with mom and dad, that's a whole different story. But when you talk about buying real estate, it puts you in a whole different situation. So I'm going to give a quick example. I did a video a couple of weeks ago about this. I had a client that was beating himself up because he decided to refinance. And most people are saying, why would you refinance right now? His rate was like 4%. Well, what happened is he was on maternity leave. He had a kid, and it went longer than expected, right? And they accumulated some debt. And accumulating debt, they're in a situation where it was tighter on them. And so what we were able to do is we were able to pay off about $30,000 in debt. They saved about $1,000 a month, right? And in turn, it freed some pain. So for those that, and I want to use this scenario, I want to talk about this a little bit more. How you doing, Ash? Good afternoon. So when you think about how, and make sure we address that question too, if it stays up there, Damon. When you think about somebody that may have been in that same exact situation, right? And I'll explain more. So his house went up in value. He bought a house 5 years ago. He's able to refinance, pay off this debt they accumulate. Everyone gets into a tough situation. The difference is by him owning a home, he's paid that debt off, save $1,000 a month, and then he still wants to buy a house later on. But if he was renting and he got himself in a tight bind, what would he do?
The first thing he had to do is pay that rent.
Well, yeah.
Because no matter what happens, you don't have that wiggle room.
Right.
You don't. So the whole point, and when you're talking about wealth, the whole thing is you want to be able to have choices, and that's exactly what you said. To be able to create a plan, which is the education piece that you spoke of, so that you can have different choices. Because sometimes when you don't set yourself up, your back's up against the wall and you have to move forward. You don't have any choice but to go a certain way. And that's similar to what you're talking about with the rent. I don't have anything I can pull from, no matter how long I've been renting, whether it be years or double-digit years, it doesn't matter. I can't pull money back because it's not anything that you own. You have nothing in there but what you paid.
Yeah, I like to call it a forced savings account. Savings bank. And then that's not the only vehicle, because I'm so passionate, and I know you are too, about that next step. But that's the first step in building wealth, is to get a property. So in that situation, while he's beating himself up, and both of them, I was like, dude, stop beating yourself up. Everyone we've seen an unprecedented amount of change in the market and in debt, the debt still, all this stuff in the last couple of years. But that being said, when you talk about what's gone on in these last couple of years, because he purchased a home, he gained equity. And so since he gained equity, it puts him in a better situation. So we'll get to this stuff later. We got a couple of articles we want to go over, but thank you, Franklin. But here's the thing. So when you talk about that situation, same situation, if he's renting, that property did go up in value.
It did.
It's for the landlord.
Yes.
So if that person's in the same situation, that landlord would be able to get out of that hardship. So I like to use 5%. And we're going to talk about this a little later, but on average, a little under 5%. I know the average rent is going up about 7%. Hey, Ramon, how you doing? Is that if you look at a $300,000 house, easy math, 300 times 5%, that's 15 grand a year. If you do that over 10 years, that's 150 grand a year.
Right. So
that's 450. So in a 10-year period. So I'm not telling you to get rich overnight, but long term, I think that makes sense. But
and then if you look at it, right now, the average rent is $2,000.
It's true. So
it's becoming more and more difficult to rent and then save to buy, because most of the time we're looking at a lot of the mortgages where you could get into homes are going to be cheaper than what you could do for rent. And then also you're not going to, like you said, it's the forced savings plan. You're putting it in there, and that equity, there's nothing that you're doing. It's just time is working in your favor, where equity is just building in your home.
Yeah, it's one of the best things, and we could talk. It's one of the things that I'm most passionate about. We could talk about those avenues of building wealth, but I think that's the first step, and then also not overextending yourself, so you can also put the money up in your savings and investing. So I know, Lita, we want to talk about building wealth. We got this NAR article that talked about that, but I want to talk about multi-units, and we can come back to the NAR article, because we were kind of talking about, I think. That market is down a little bit as far as, I think it's a good way for people to get into a home right now and build wealth. Why don't you share about your thoughts on the investment property gain, whether it's a 2-unit, 3-unit, or 4-unit?
Yeah. I've actually had this conversation earlier this week with a young lady who's looking to purchase, and she was trying to figure out ways. She's a first-time home buyer. And she's looking at doing a 2 to 3 unit. She's going to live in one unit and rent the other one out. When we were running the numbers, what she found is that even the mortgage will cover the entire building, was less than what she was looking at for rent, because she's currently at home with her parents. So will be moving out for the first time. So she doesn't have that rental bill. But when she was looking at apartments, looking at places to rent, You look at numbers for mortgage, it's going to be less expensive. But on top of that, she's even saving more money because what she could charge for rent for the second unit actually covers her mortgage and allows her to put a little cushion aside for those things that are going to happen, repairs, maintenance, things
Right.
along those lines. So down the line, 5 years from now, a little bit longer, if she decides, you know what, I'm going to rent out the second unit and purchase something, she now is able to do that and still have income coming in each month along with moving somewhere else. So you just, again, we're talking about choices.
I want you to dive into that a little bit deeper, but we have a couple people ask some questions. So I'm just going to say hi. So Cardia, thank you. I appreciate you. Hello. Navi, Latrice, I'm glad to be back. Prod, good afternoon. Okay, so Ash, you had a question. So it's better to own than rent. 100%. 100%.
Well,
just take that one. Go ahead.
Okay. When someone asks me that, I always ask secondary and follow-up questions because there's a couple scenarios. Like Brian said, this is going to be a long-term thing. It's not a get-rich thing where you're going to be able to do it, leave, and then you're going to have all this equity. You can do all this and just quick. It's going to take a little time. However, if it's something where you're looking to stay in the property, stay in the area, you're not looking to relocate, you're okay with that. And then what are you currently doing? I like to run the numbers, especially if somebody's renting. We can run the numbers to see what it's costing them to rent and a similar property what it looks like. When you see those numbers, it kind of helps people make that decision. So and you have to take into consideration also the upkeep and maintenance of a home. They could also the benefits of the tax write-offs for home ownership. The equity that you're gaining. So I won't ever say yes or no, but over 90% of the time, it's going to be better.
So I said 100%. I'm going to say 90%.
Because you'll have a couple that sometimes you're like, I don't know. If you think, if you have a job where you're going to be leaving in a year or so, you don't really know.
Right. Stability. Yeah.
So that piece of it. So we ask some questions to see what makes sense for you. Each scenario is a little bit different. Most of the time, we're going to tell you yes.
Yeah, so you touched on it. So we talk about the main benefits of home. You just talked about property value goes up.
Mm-hmm.
So that's one, right? You get the write-off the interest.
Yep.
Right, and the property taxes.
Mm-hmm.
Right, so that's 3, right? And then the other thing is, what's the nice thing about, this is going to sound so funny. You want to go in your home and paint your walls purple? Can you do that?
You can do that.
Do you need to get permission?
I do not.
No. So it's just having home. There's a lot of studies that talk about if you have kids, having stability, having them in the same property, a home, and not move around. They grow up better and they come out more successful. So, and I think I might have skipped one, jumping around, but yeah, appreciation, being able to to knock down the principal.
Mm-hmm.
But yeah, Alita, you knocked that out the park. So I'd say most of the time, Ash, it's a good thing to own a home. Let's talk about that. If you want to get a plan together, Alita and I both can help you with that. Look at your numbers and make sure it makes sense for you. And
what Brian just said is key. What you want to go do is create a plan.
Mm-hmm.
Regardless what you do, you want to work on that plan. Even if it's something you sit down, you're like, you know what, I'm not quite ready now. But when you have that plan of saying, okay, this is what I'm going to do. This is what I need to pay off. This is where I want to go. This is, I'm going to do, like we talked about the multi-unit, and this is going to be the long-term plan. Now, your plans may change, but at least you have something you're working towards, and you can kind of see that all come together. It's sometimes when people just wake up or you see somebody else do something, and that's something I want to touch on just a little bit. Everyone's situation is different. You can see we could work at the same place, have the same salary, do the same things, but it doesn't mean just because you got a $400,000 house, oh, well, then she got a $400,000, I can get a $400,000. There's a lot of different things that take into place. So don't assume what somebody else does is going to work for you. Or if someone else had a hardship, don't assume you're going to have that same hardship. You don't know. That's why it's important to sit down with somebody and create a plan. Right.
Because somebody that's making the same dollar amount might be living like they're making 3 times more than you.
Exactly.
Right. So you got to look at that. We got this article here, just kind of going back to, and I'm going to get to the questions, but I do want to talk about that. Then we got to come back to the multi-unit. I know I'm all over the place a little bit. Organized chaos. So this is from NAR. For those that don't know who NAR is, you can Google this. It's the National Association of Realtors. They put an article out a couple of months ago that said, it study home ownership, that the average homeowner wealth, right, net worth is 40 times higher than renters. So we said 90%. I'm willing to say it's close to 100% because, again, if it's 40 times higher, they're just using that example that Alita and I just went over. If I buy a $300,000 house and in 10 years it's worth $450,000, if I'm renting paying $2,500 a month over 10 years, what is that? Quick math, somebody. $2,500 a month times 2, that's $25,000. What are we
That's
talking?
it.
35,000 a year, so times 10 is 350,000. Did I do that right?
Yes, you did that right.
Okay,
Let's
cool.
see.
So yeah, that's $350,000. Yeah.
Wait, let's take a.
Hold on, let me do that.
Wait,
Yeah, that
pause
is.
for just a second. So you just said,
Hold on.
now, if I'm renting,
Yeah, that's
and it's
300,000.
up,
Yeah,
my rent is going up each year, right?
yeah, I didn't count that in.
Rent. Well, so let's just say it stays the same. We'll just keep it even. Say it stays the same. You say that person owns a building. Let's call it 20 years. They own the building. You've paid rent for 20 years.
That's 600,000 in the case you just did.
So now you pay. So now,
Ramon, don't be hating on my math. My math is good. I'm glad to be back too. Thanks for that.
We just like to double check it. We want to give you false information, so we want to use the calculator. But no, you're paying that. You sit there, you're paying rent, or someone is paying rent to them over that time period.
Yeah.
We're talking about now the building that they own, that's going up. They're getting more equity.
Yeah.
They're having the mortgage paid off, and pretty soon that building's going to pay it off. So then everything that you're paying to them is not even mortgage anymore; it's straight profit. Yeah. So it works no matter what the scenario is. If it's renting, or if you're the renter, or if you're the homeowner, it's working. It's just, is it working in your favor? It depends on what side of the table you are.
100%. Yeah. So you couldn't hit that one out the park. But I mean, you compare those two, just the math that Ramon's talking about, 300,000 to a house that's gone up 150. And somebody may want to do some crazy math and say, well, it only went up 150. Well, you threw out 300,000.
Right. So all day.
So, that's I think that's so important that we look at that about as far as the wealth building. And this piece, when you start looking at things from a different perspective, and you guys, again, you can look up that article. I found it very interesting, is that you start looking at things from ways that you can get on the board, and kind of going back to what Alita was talking about, is that, getting that 3 to 4 unit or 2 unit to get you started, because that's where there are programs where you don't have to put a ton of money down, and you can get into it, and you can start to take that step to build wealth, which I think, so many people get fearful because of what happened in the past. But if you make better decisions, then, and you have a plan, you'll get through it the right way. One of the things that I talk about all the time, one of my favorite scriptures, is James 1:5. It talks about, if you lack wisdom, ask God, he gives it to you. But this is part of getting wisdom, is making sure that, you do your research, and you look at things, and you look at all we're being conservative too, guys. We're saying 5%. We didn't say go up 10, 15, 20%. That's not what you saw with that 2-year period. I don't think you'll see that again. If we do see it again, then man, God bless. But this is a way to get into a home and put yourself in a better situation. So I think we spoke to Natalie. How you doing? She said, do mortgages go down over the years? Well, what do you mean by go down? Can you do you mean in terms of, are you paying them down compared to renting, or you doing your payment? In a lot of cases, and I'll be transparent about this, is that the mortgage payment can go up, not your fixed payment, not principal and interest. Your taxes could go up, which you get to deduct, just like rent goes up, right? Your interest won't go up, and your principal will go down. So I don't know if I addressed that question right.
No, that's a good question, because people always ask, so this is my payment. It's going to be my payment for the 30 years. Yes, your mortgage payment is that. If you have a fixed mortgage from 9, 10, 17, you will. That mortgage portion, but your mortgage is made up of your principal, your taxes, and your insurance. So your taxes, in our great state of Illinois, your taxes typically go up. And then I think too, that's something that people are talking about now too, because equity, the homeworks have gone up, the taxes have gone up as well. So your overall payment may increase, but it's not actually your mortgage payments increasing; it's your taxes that you're paying to increase.
Yeah, or insurance, because you think about it. Yeah, insurance could go. Whether you had like a claim or something like that, so insurance companies don't just let you get away with that for free. Prod had a question. What did he say? Is it better to? I can't see it anymore. Would you recommend apartments or just save up for a home?
I think it depends on your scenario. Some people have I know people are itching and like, you know what? I have graduated college or high school, whatever else. I'm getting my parents' house. I'm going to get an apartment. But if you could stay home and stack that money for a down payment versus just saving money to get an apartment, I would say do that all day. Some people don't have that luxury of being able to have somewhere to stay and save money, because it's going to be more that money that you're paying in rent, you could just save for your down payment to move into, to get a home. So it depends on your scenario. If you can, I would say definitely. Or you may have to cut back on some other areas if you're not able to do that.
Cool. Yeah. I like Ramon's question. What is the age for senior freeze and senior discount? Well, it depends. And so it's 62, I believe, is the senior, right? Or 62, 65.
And sometimes it varies by villages.
Right. Yeah, I was going to say. So that's what I'm saying. It
Or
depends.
cities.
But you have to apply it. And there's different things they may want for you to apply. Like they might ask for your income, right? So if you're one of those that's making a ton of money, they're gonna, in our great state of Illinois, they may not be so quick to give you that discount. But senior freezes you can request, and senior discount. I'm sorry, senior discount. I think you get automatically for your age. You got to apply. But the senior freeze, I think, is income based. But you got to double check into your village, wherever you stay, to confirm that. DNF says interesting. I don't know which interesting part. I try to be interesting.
Okay. If my income is $75,000 a year, what is a good dollar amount I should look for in buying a home? And yes, I have a good credit score.
Love it.
I love that combination because the dollar amount doesn't really matter. Well, let me say it back up. The dollar amount does matter, but your credit score also plays into a part. Sometimes people don't put those two together and think you can have one without the other. You need both.
Yeah. So I like that. I love math, Ramon. So I love scenarios. So we're not going to say, we're not going to say it's you. We're just going to say someone's income is at 75,000. We don't know. So that's 6,250 a month. So when we're figuring out debt to income ratios, right? And I would generally say max is 45. I mean, there's ways you can get around and do things, but let's just say 45%. Now I'm going to work this backwards, but I'm going to ask you a question. So you're going to play along. This is the Monopoly board, right? We're not necessarily talking about your income. We're talking about someone else that's making 75 grand a year. So 6,250 times 45%, right? That puts you right around 2812. Now, some loan offers, some people just stop there. You can afford $2,800 payment. What didn't I take into consideration? Well, there's a couple things I didn't take into consideration.
Right. Number
one, I didn't take into consideration your debt, and I didn't take into consideration where you feel comfortable with a mortgage payment. You can afford $2,800. Let's say you have zero debt, right? But you may only feel comfortable paying $1,500. So we need to work backwards. Another scenario is that I love math, man. We hear a lot of people say that about. Another scenario would be like, I like to tell people that generally speaking right now, whatever your purchase price is, you're about 1% of that amount. So if you buy a $300,000 house, you're going to be about $3,000 a month. Now, in certain cases, like we ask the question, are you buying in the city or the suburbs? Because the city taxes are a little lower. They're trying to catch up though. In certain areas, they're trying to catch up to the suburbs. And then the suburb taxes are a little more. So you might find a $300,000 house. You might find that house to be about, $2,700 in the city, and it might be $3,300 in the suburbs. And I'm making this up. And it also factors in the down payment and what you qualify for. So for someone that has really good credit that's making that income, starting off 45% would be $2,800, and there's ways to play around, but then you got to back out the debt. So let's say they have $1,000 in debt, right? So 1,000 minus 2,800 is, anybody? Come on, Ramon, do some math.
He said, no, that's not his check.
1,800, right? So that's where you say, okay, maybe I'm about 200,000. Or it might also be that, hey, I want to buy a 3 unit. So now I get to use rental income for 2 other units to help you qualify for more. So the scenario, it really depends. This is the boring part that we like to fall asleep at in school. But at the end of the day, if you can learn and master this, and you have someone that's good that loves this stuff, that will help you.
Yes.
I'm not sorry for tooting my own horn. Go gadget your hand, right?
That's exactly what I do. So let's say you came to me as a realtor and said, hey, Lita, I'm really interested in buying a home. And my first question is going to be, have you gotten pre-approved? I'll be like, no. Well, I'm just thinking, most of the time people say what I said, I make X amount of dollars. People in my job is spend how they make this. And I say, okay, let me get you on over to Brian. And I want you to do 2 things. And Brian does a great job with this with my clients. That's why I love sending them over, because not only does he say, okay, you qualify for, like he said, $2,800. I'm always saying, what are you comfortable paying? Because what I don't want you to do is be like, thanks for giving me this house. Then now all I can do is sit in the house because I'm house poor, because you can't do anything else. So if you love to travel, you do this. No, you know about how much you want to pay for in a mortgage per month. Now, most of the time they'll work with Brian. He'll tell me the number we go through. I always ask him the same thing. So, okay, so you're saying they're approved for $350. What does that look like for them for taxes? And he'll tell me a number, because then that helps me say, okay, if you're looking in this area, like you just mentioned, the city versus the suburbs, I can say, okay, well, you're going to get more house because the taxes are lower over here versus over here. We can kind of look at the scenarios and we can see what makes sense for you and kind of keep you around that same payment. So you want to make sure that it's not just a number. because you want to do other stuff besides live in your house. We're saying, you know, create wealth. We want you to have homes, but at the same time, that's not the only thing you want to do, because then that's how a lot of times people get overwhelmed. But those are the questions you need to ask. It's not just what you qualify for, what are you comfortable with? Because 9 times out of 10, this is 30 years. So it's not something that's just like, oh, well, you know what, I can do this for now. What are you comfortable with, so that if you want to do other things, travel, whatever it is that you like to do, boat, I don't know. But you want to make sure that you have that discretionary income to do those things as well. So that's and that's what we were talking about as far as plans. So it looks, so that him and I are on the same page. And he knows I'll call him in a heartbeat and be like, hey,
that's one thing I love. Let me know. Yeah.
We're going to look at this house. Make sure to make these numbers. Because what I don't want to do is pull up to the house that you love and you find out, oh, yeah, the math is not mathing for you. Sorry. We know that going in to make sure.
Is that a new thing now? I hear people saying that a lot. The math not mathing. What movie was that on?
I have no idea.
I've been hearing that a lot lately. And I'm going to get to your questions, but Alita kind of rolled me into something that I'm really passionate about, is the wealth. We're going right back to the wealth. You guys, as y'all get to know me more and more, I'm going to talk about wealth all day. That's the part.
Mm-hmm.
And so I truly believe that, yes, buying a home is one of the top 5 decisions you make in your life. I'll answer that in a little bit. You guys that know me know I've asked this question. But I also think that, like Alita just said, you need to make sure that you have discretionary income. So my philosophy is this, and you're not required to have reserve, but if you really get down to the weed of it, I think you should have 3 to 6 months reserve. I think you should live off 70%. You know, if you can. Now, certain situations you can't, but you need to take a step. Don't pay rent and you buy a home. I also believe that if you're at a job that's matching your 401k, you should be trying your best to max out your 401k. And even if you can't, if you talk about putting up, I don't know, $6,000 a year over 30 years, that's 1.2 million. Money doubles every 7.5 years or so. So that's not real estate advice. That's mortgage. That's financial planning advice, but they go hand in hand. So when we talk about building wealth and your property goes up, that scenario we talked about earlier, in 20 years, you got a, you know, $400,000 or $500,000 house. Then you have, you know, $500,000 in your retirement, and you have some other discretionary income. That's what, you know, freedom looks like. The thing that bothers me the most, and we're not talking about it, just, I hate when I see, I shouldn't say hate, I dislike very much when I see people, and I say my people, but people in general that's older that don't have any money in their retirement. They don't own a property. You know, you talked about an article that you read and talked about minority ownership is down, it's at its lowest. And, you know, that bothers me. So I talk with, the more I get a chance, I get a platform to talk about it. And it's everyone needs it. I don't care, you black, white, Hispanic, doesn't matter. But I think even more so, they don't teach us this in school. They teach us take out student loans, go to school, work hard, get a job. And then they don't talk about this part. They don't talk about home ownership. They don't talk about discretionary income, saving and investing. So I think those,
it's the why behind things. People aren't giving us the why. So I think if we talked about information, if we knew the why behind it, you wouldn't be in such and everything is so instantaneous right now. If you knew, like Ryan just talked about those numbers, okay, you're saying them in doubles, and you okay, if I do this is going to lead me to 1.2 million. I think more people would do it, but it's the fact that you don't know and you don't know how to go about it. So it's not something that's on your radar. And
it's long term. Nothing I said was 2 years, 3 years. Now,
no, but it helps me make a decision today if I'm going to drop $5,000-$10,000 on a person some shoes versus when I could do that and put it in there to get to my $5,000. They do. Yes.
God, I got a good wife, man. I have to make Erica spend money. So I'll tell you, it's funny. You know, I'm like, man, I don't have that problem. I mean, I thought you were gonna say $5,000-$10,000 on the car. I was like, okay, yeah, you gotta stop doing it. But purses.
Yes.
Okay. I got to keep up.
I'm not in that aspect. You don't really know.
I don't know. I just keep it up. But no, so I do. I think it's important. When we talked about that, the building wealth is this is the Monopoly card game. You know, cash flow quadrant. I don't know if you guys played Rich Dad Poor Dad thing, but this is the getting in the game and you start. Even if you're older, don't beat yourself up. I do believe God restores years to us. We just got to make right decision. And then when the market turns, so you're getting rich long term. But when the market turns, then opportunities create itself because you've done all the right things. Exactly. But you got to start somewhere. A couple of questions came up. Yeah, I'm gonna let you take that one. Natalie said, "What's the best area to buy in?" And then Corey said the thing, "Where is the best place to buy a house?" So that question came up back to back.
Okay, so that is again, it's gonna be. I'm gonna have to ask you secondary questions. One. There's a thing in real estate called steering. We can't necessarily steer. It's illegal for us to steer you to a certain area. Like, oh, well, you like this, then you should live here. So I ask you questions in regards to where do you work? Where do you spend your time, like if you church, athletics, things like that, where do your family, where do you spend your time? Are you trying to commute to work? A lot of times now I'm working with clients that have been working from home and now they're having to go back into the office. So are you trying to be in between? Are you looking for a particular sports team for your children or school district? What are you looking for? And then we can narrow it down. Most of the time we narrow it down between 2 and 3 areas. And after we run those numbers, like Brian mentioned, as far as, let's say if you tell me you're approved at 350, okay, 350 in this area gets you this, 350 in this area gets you that, 350 in this area gets you this. So you can kind of look at it, and normally people are then able to pick an area and we kind of hone in to figure out where you can get the most bang for your buck and where you're most comfortable. Because as we start looking at, when you set up the search, you can see, you know, the size of the home, size of the yards, things that it's close by, and you can kind of go from there. So I don't think that there's necessary, and what are your long-term goals? Sometimes people are working in an area, but they know that they're going to need to be near a train station or, you know, because they have to commute. So it's a lot of, it depends on your lifestyle and kind of what you're doing as to what area works best for you.
Sorry for that. I just finished reading Ramon's.
What did you say? I didn't see it.
I'm bad at math unless it's regarding my check.
I'm with you. I can do percents really fast. Other than that,
you know, it's funny. Hey, my check's short. You know. But I'm with you. 100%.
Interesting. So I hope that answers. If you have more questions about that, just pipe in. Yeah. Advice for first-time renters.
Yeah, I don't know.
I don't really know what you would want.
Is he talking about investment properties?
Yeah.
Or is he talking about first-time buyers? I mean, I'm trying to make sure he's clear on that. Now, if you're still there, can you
just kind of clarify for us what you mean so we can answer that for you?
No, we appreciate you guys share. I mean, this is, you know, we had an agenda, but I love the interaction because, you know, at the end of the day,
definitely.
we want to make sure we're addressing your questions and giving you guys solid information.
Yeah. While you guys are tuned in, please make sure that you're sharing this on your social media so we can reach as many people as possible. We'll share at the end something that we have upcoming where you guys can see us live and in person coming up soon.
Yep.
And then what else?
That's coming up the 5th.
August 4th through the 6th.
Okay, cool. Yeah. It's coming up in a couple weeks.
Yes.
That's a teaser.
Yes.
So he's not. So if you're talking about the investment, like back to your strategy to 3 or 4 units, are you talking about first time renters? So like, you want to give advice on, you know, maybe how to screen people? Is that where he's going?
Yeah. If that's the case, I have worked with people who are getting their investment property set up. And what I typically do I work with the clients. I set it up open house style where I may do some postings. We do some things to set up to say, hey, if you're interested in this property, I put it on MLS as well to say, hey, we're going to have an open house Saturday, you know, 1 to 3, Sunday, 12 to 2. You can come on through and tour. You can get credit applications while you're there. People come through, they're able to tour the property. They fill out an application. I have an app where they're able to get their, run their credit. So they fill all that out, they give it over. We set that up, and then I help the client go through applications and screenings for tenants. So that can be pretty painless. So once you get to that point, we can definitely do that. So
I remember my stepdad told me something too, and I don't know if you're allowed to do this, but it was either my stepdad or my aunt. And they said that when they have a potential tenant, they somehow like to go meet them at their place now to see if, you know, how they're, you know, how they kind of
currently the conditions,
like their car, and you know how they clean up stuff. I mean, not trying to call people nasty for that, but you know, you kind of how they take care of stuff, because how they take care of stuff is basically, you know, how they're going to take care of your property, and that's important to know. I mean, I'm not going to say give you all the advice on that. That's one thing I'm thinking of, though.
But you gotta be careful with that, because if you do that for one person, you have to do it for everyone. It has to be the same human cost.
Yeah.
So if you're making a lot of home visits, then then you can't. You just can't do it to some people. You have to do
that's
it to
true.
everyone.
Yeah, that's a good point.
That's fine.
All right, you want to talk? So we kind of anything else you want to leave on that 3 to 4 unit? Hi, Leslie, how you doing? That's my accountability partner, by the way, too. Leslie, that's my people's.
Leslie, I feel bad for you. You have to hold him accountable. But go ahead. That's not an easy feat.
You are hilarious today, Alita. I love it. Anything else you want to go on as far as the 3 and 4 units before we go to the next thing?
3 and 4 units. I just wanted like I said, create a plan with it. Some people, you see these Instagram posts all the time, like it's so easy, just go in and do this. I'm not saying that it's hard, but you need to have a plan. It's not just going to be, you know, wake up, do it. It's got to be somewhat planned out. And think about the area. We could look at a couple different things. So that's all. Obviously, just do your homework and work with an established team like us so we can help you.
Yeah. The one thing that, and I was thinking about, I was talking to somebody about this yesterday. When you're looking at a 3 or 4 unit, so I'm just going to talk about that, and then we can back down to a 2. I know it's kind of weird I'm doing it that way. For a 3 or 4 unit, there's a couple little caveats I want to give you. So you don't have to come up with 25% down. So let me just bust that myth too, because I had a client call me yesterday that was asking about buying a house, and they said they had an FHA already. They said, hey, we're going to pay off our $60,000 loan. So, you know, we don't have to put down 20% on a new house, but they wanted to buy like a $500-600 house. And I said, well, who told you had to put 20% down? And I was like, no, that's an old myth. So if you qualify conventionally, you don't have to put 20% down. Same thing with an investment property. So 3 and 4 unit, a lot of people think they got to come up with 20-25% down. That's the case if you're not going to live in it. If you're going to go with it like an FHA loan and you're going to live in one of the units, then you can get away with doing 3.5% down. So we could talk back and forth on that.
Yeah.
You want to start from 1 to 2, 3 to 4 units. So I'll just give you a little bit of stuff off the top of my head. It requires 3 months reserves, and having 3 months reserves, that basically means whatever your mortgage payment. So let's say your mortgage payment is $3,000 a month. So you got to have $9,000 put aside outside of your regular down payment and closing costs and things of that nature. So that's what, because they expect you to not go into a 3 unit or 4 unit, and except for VA. VA is a little bit different. They want 6 months reserves, but not go into a 3 to 4 unit and not have any money, or be in a situation where you're going to be tight in, you know, those things you just talked about, dealing with tenants, being able to take care of those things. And then there's renovation loans available too. If you're living in a property, you can tidy up the place and make it to where you want it, and you know, be getting a little bit more rent. What do we got? What is one thing you can share for positive mindset for partners and buyers?
That's a good one, because right now, I talked about a little bit in the beginning. The buying market is tight, meaning that there's limited. So right now, there's way more people purchasing homes than there are homes available. So what happens with that is you go to see a house, you know, it becomes available, it comes on the market today. You might have 10 offers on it tomorrow. You might have people are bidding above what it's listed for. So it becomes and I'm seeing it with my buyers where they just get tired, because we put in offers, we're getting beat out. You put in great offers and still you're getting beat out time and time again. I'm a firm believer that once we do the work, we look at it, it makes sense. That what's for you is for you. I've seen it happen too many times where people are like, no, this is the house, this is it, whatever. And then something happens. Another house comes up in 2 weeks and they're like, man, I never thought that I could get this and this for this price point, or this worked out better. I'm glad I didn't do this. But you can't, and I understand you get caught up in the middle of it. But you just have to firmly believe that what's for you is for you, and it's going to be what it is. It gets a little tiring, but we're going to hang in there and make sure that you get what you want. And I don't feel like you should throw in the towel, meaning just settle. This is one of the largest investments that you're going to make. So as long as you're realistic and we get out there, you know, we'll work until we find it.
Good. I love what you said. I would say I agree 100%. Yeah, Leslie got perfect time. I think she knew where I was going to go with this. So, you know, it is, you know, it definitely is faith-based, but, you know, I'm going to steal Stacia's thing. So I'm not going to go the God ways unless you're talking about. So one of the things I ask each client is, what's the most important thing to you about buying a home? And I just listen and bring that back up, because, you know, it depends. Like if it's to build wealth, right? Or if it's to have, you know, safety, for your family, you know, bring up great memories, then we got to look at those things. So some things you might have to negotiate with, and some things you can't. But I do think that in this such a market where you're dealing with, we joked about the musical chairs last year, but we're kind of dealing with that, right? You know, you got 10 people looking at the same house. Another thing is to be properly prepared, you know, be fully pre-approved, go through the process, go through underwriting. And so we can write a letter or do a nice little video saying how great you are as a buyer. And so this way you can eliminate some of the competition on certain things, but you got to give it 150%. So mindset, yes. Why am I doing this? What's my why behind it? Leslie, stop laughing. That's an inside joke. You know, what's our why behind doing this? Because, you know, and then at the end of the day, what steps can I take to make sure I get there? And then sometimes you just said it's the timing, right? So that's kind of, and you know, at the end of the day, you know, if it takes you a couple of months, if it takes you a couple of weeks, you'll find the right one.
Yes, you will.
Yeah, work with the right team. Great question.
Mm-hmm.
We kind of addressed the 3 and 4 unit. I didn't go over the reno part. You want to talk about the 1 and 2?
Oh, you know what? One more thing on the 3 and 4 unit.
Mm-hmm.
So in this scenario, say, okay, I've got the 3 or 4 unit. I've had it for 5 years. Now I wanted to sell it. Well, not necessarily sell it. I want to rent out the unit, one of the units that I was living in, and I'm going to get a 1 or 2 unit in a different area.
Yeah, you see, now you got to come up with more money. No,
so that's what I was want to talk about.
That's got to go more money.
That's the thing that you see on Instagram. They're like, oh no, you can just move in. You see those posts all the time. You don't get their backstory. So I wanted you to touch on that just a little bit.
Since you're going to bring that up, I'm going to make some people unhappy. Okay. Here's some things. You got to do things the right way when no one's looking. Okay. So all these little tricks that people come up with and say, hey, I'm going to buy a 3 unit in my name and my wife's going to buy a 3 unit in her name. Guys, that's fraud, because if you're married and you're living in the same place, that you can't do that. There are some people that just let you do it. So that's one of the biggest fraudulent activity that happens in our industry. And so again, you can buy a property like Alita just said, 3 or 4 unit, live in it for a year. That's you're only saying you're gonna live it for a year, and then do another one, but then you got to come up with more money. Mm-hmm. One thing that I see people do a lot of, they buy that 3 or 4 unit and then they buy their house, and now you don't have to put down 25% down on the house. You're going to live in the house, so you can get away with doing 5% the second time around. Right. So you got to be transparent, and I'm just a firm believer, guys. You do the right thing when no one's looking. You don't have to worry about looking over your back later on. Something coming back to you. So I think it's important that you understand that, and we set it out. So we're very clear about that. Primary residence is a big thing in our industry that
it is.
People try to be slick with. And if it's an FHA loan, you have to live in the property. Okay. That makes sense. Is it possible to do a 3 to 4 unit, then a 2 unit, and then single family? Yeah, but the 2 unit.
What if you live in it, right?
Yeah, the 2 unit, but if you're going to move into the 2 unit, well, it depends, Leslie. Yeah, and I'm going to let you answer this question because Leslie's also a licensed mortgage professional. So I think the 2 unit you could do conventionally. So check this out. I think you could do the 2 unit first conventionally if you meet within the income guideline. Go to Freddie Mac and see. I'm talking guidelines now. Freddie Mac is a different service that we use. And then you can buy the 3 to 4 unit in a year and do FHA, right? And then you can get your single family home with 5% down. So in that scenario, if you do it the right way, you can do all 3 without coming up with 20, 25% down.
So you said 2, 3, 4, then single
family? Well, because the 2 unit, you can go Freddie Mac if you meet income guidelines and do 5% down, right? And then you can turn around and do a 3 to 4 unit, go FHA, and then buy your house. So now you really haven't spent, you've spent 5%, 3.5%. So that's 8.5%, right? Then you go 5% again. So you got 13.5%. Ramon, where you at? There you go. And that's not including closing costs. So you bought 3 properties without coming up with 20% down payment.
Yes.
Yeah. Thanks for that question, Leslie. That was a good one. So we hit we didn't talk. So, a lot of times they see properties in distress. So one way of being able to win some properties that necessarily you couldn't have because they need renovation. So we do renovation loans that allow you to, put a little TLC on it and purchase. So
yes, and that makes it. I was just talking about the inventory levels. So that makes, while everybody's running over here to look at this, you can kind of look at this. It's not as a competitive pool of homes because people are looking for stuff to just move in, don't have to do anything to, but you can get those fixed up and then be able to move into them. And it's still, this is a question people ask a lot too. Is it still one mortgage? Or do I have?
Yes, it's one mortgage.
Yes.
One mortgage. And there are certain scenarios where you can roll 6 months of mortgage payment if it's a full. So without getting into the weeds, we'll do a show on renovation loans because there's a lot that we have to go into there. I've been doing it for a long time, but I don't think we're going to do it justice by talking about it for 2 minutes.
Right.
But there are situations where you can roll the payments if it's a full, if it's like a full blown renovation, or if it's a streamline, you can't roll the payments in there. But there's a lot of different programs we can do for renovation loans that I'll be happy to talk about that we can come back on and talk about it in a couple of weeks or so.
Okay.
But there's a couple more topics I want us to hit. We got like 15 minutes, I think. We got to talk about where we're going to be. We'll get to that at the end. So I'll make sure that little star thing coming up for our program. So I want to talk about a couple new programs. I'll probably at least hit one. And then I want us to address this buy versus rent because we had so many questions about that in the beginning and I kind of teased it.
Yeah.
Next show, I'll make sure I have my iPad and we can share this on here. And I've done it before, but here's a scenario. Can they see us when I hold this up? Oh yeah, it's cute. It's not in color. Where's the camera at? Here's it right there.
Straight ahead. Yep.
There you go. So we're going to talk about this buy versus rent. And so what it is that it takes a property. If you're looking at a house for $400,000, and again, we'll share this again, and what the average rent is going for that property. Okay, the average rent is about $3,100. They look it up. Moody Analytics automatically does this. Almost $3,200, $3,181. And then it talks about how it goes. Annual rent increase is almost 6%. It's 5.9%. Okay. The average appreciation, and this is just in Cook County, Chicago, they're saying that's about 4.79% forecasted appreciation. So a little under 5%. So this $400,000 house, after 9 years, after you sold the house, paid your real estate costs, your taxes, your insurance, if you had to pay closing costs, you're walking away with your total net worth from this sale, net gain, is $278,000. And how does that happen? Well, you paid down the principal, which is almost $60,000 over 9 years. Okay. The amortization going up in value and appreciation going up. So when you look at those two combinations and selling, so you get about $278,000 that you walk away with. So that house is going to be worth, you're selling it for like almost $700,000 in what they're looking at an average increase. Estimated value is $609, but because you paid down principal, things like that, you're going to walk away with about $278,000. And that's, again, we'll share that to you. So easy math. Who said that? Should I rent? No, you shouldn't. So this person, this example would be paying $3,200. So $3,200 over 9 years. Ramon, pull out your calculator. I'm gonna stop picking on him. So 3,181. Okay. Times what did we say? 9 years. That's about $343,000 in rent that you've thrown away. And in this scenario, you would have walked away with about $278,000. Okay, in 9 years. So when we talk about that, and again, we'll make it nice, colorful, and pretty for you. But this is it's another wealth building proof that you should look at doing instead of throwing money away, guys. Okay. Program, we said, right? Yep. So one of the issues, and I want you to touch base on this, there's a couple of reasons that we see why people don't buy or why it's tougher. One's going to be credit. I'm going to make you spend 2 minutes on that. Notice I said you.
I know. It's fun time.
And then the other one, I think, is funds, down payment. I mean, we're in a situation, people are coming out of school with 100,000 plus in student loans, which normally is more than that. So sometimes they're tighter in tighter situations and they can't afford for down payment. So there's a ton of grants out here. We don't have the time to go through all those programs. So, Alita, I want you to touch base on credit a little bit. You know enough about it, and then we'll touch it, and then I'll get to the new program we have coming out.
Most of the time people reach out to me, and like I said, I want to touch this. I ask if they've been pre-approved, and typically people will say no. They're kind of just starting out, and then I'll ask them, well, how do you have an idea of how your credit is? And they're like, oh, you know what? I saw that I can get a mortgage with a 580 credit score. I'm at least there. Now, just because you can do something doesn't mean that you should. Because with that, although you may be able
to. But Google told me I could.
Just because you can, it's going to cost you. So just like we were just talking about creating a plan, most of the time, Brian will he's talking about the different programs. So look at everything to see what program works best for you. But then also, one of the things I truly appreciate is that sometimes he'll tell you, we could do it, but if you fix this X, Y, and Z, you come back and do it, it'd be a way better scenario for you. So that's the plan I was talking about. So we'll look at different things and see what you need to do, what you don't want to do. Well, I'll touch on two different things. He spoke about your debt to income ratio. You want to make sure you're current on your current bills, credit cards, everything that you have. If you have any foreclosures or anything like that, let us know that up front. The main thing is be very candid and clear of what you have up front. Sometimes people think, oh, well, I didn't say anything and didn't catch it on the first credit sweep or whatever else. One of the things that happens is we go through underwriter. There's no secret. So it might not come out today, 3 days from now, 4 days from now, it's going to come out. So if you tell us up front, we can put you in the best situation to make sure that everything gets to the goal is for you to get to the closing table and get the keys to your house. So if you can tell us candidly what's going on, we can. Brian's seen tons of different things. You've been doing this forever. So he's seen tons of different things. So he can tell you what you can and can't do and how to work around it and even give you a realistic time frame. But we can't help you if we don't know. Once you get the pre-approval, I'm going to give you those don'ts as well because I know we're talking about credit. However, it's not only just for you to have credit to get pre-approved and get the letter saying that you can purchase the house. We need you to maintain wherever you are or to improve by the time we get to the closing table, because yes, they are checking again. So no, you cannot make any large purchases. No, you cannot co-sign for anything. You can't do anything that's going to adjust the amount of debt to income that you've had that you got pre-approved on.
No, I love that. You hit it out the park. I mean, it's credit is so important. And guys, we do catch a lot of this stuff. Well, so, and we are TBD and everything. Within the next couple of weeks, we're back to doing that. We have to clean up a couple of things. We catch most stuff up front, but you guys can hide stuff. You guys have gotten real creative. You know, this is like, you know, this whole getting stuff deleted off your credit report and all that stuff. Let us know. Just be honest. And one of the reasons why I like, and we will take an app over the phone for you, but one of the reasons why we like to get the apps done online, because you tell us yes or no, have you had a foreclosure in the last 7 years? Now we look up everything, but it's important that you're transparent. Again, guys, they have ways of finding out. There are these creative credit repair companies. They get stuff deleted off. It doesn't show up on your Kavers lien, and getting into that, we do track that. So there's things that you just need to just be completely transparent, 100%, and then we can help you. So I want to talk to you a little bit about this program, and we have plenty of grants programs. So this is for those that don't know, I've been with Cherry Creek Mortgage for over 11 years. Really good company, top 40 mortgage company. We just merged with Guild Mortgage on April 2nd. So that's one of the reasons why I kind of took a break too, because it's been nuts and it's good. We're busy. So we're a top 10 mortgage company. We keep 90% of our mortgages. I'll give you all the spill on that later. But what's kind of cool, we have 670 first-time buyer programs. So I'm just going to drop the mic there. I know about like 10. That's a lot.
That's a ton.
That's a lot. But this one in particular, I felt like it's a game changer, and I want to talk to you a little bit about. Now, it's a conventional buyer program, so it's not. We do FHA, ton of that government loans, but I want to just kind of share a little bit with you. So it's 80% of the AMI, or the average medium income, and what that basically means that if the average medium income in the area is 100,000, 80% is 80,000. So in that situation, you can't make more than 80. Okay, we have to look that up. You only have to have 1% down, conventional loan. You would get 2% from Guild, from us, Cherry Creek Division of Guild, and that's up to $5,000. So if you think about it, on a $250,000 house, 2%, $5,000, we use towards your down payment, and it's non-repayable, completely forgiven. The third part that we like is the payment advantage. And so as a lender, we're going to give you a 1-year lender paid temporary buy down. And what that basically means, if the rate is 7.25%, you're getting 6.25% that first year. Okay.
Wait. So people, you say that number, people are like, oh, that's not that much, 1%. On what? Give us an example of what that looks like.
Well, I mean, that could be on a $250,000 house. I mean, that could be like the difference between like $150 a month, something like that. I mean, I can do the quick math. You would put me on a spot like that.
No, because when you hear people are like, oh, it's not that much, it's 1%.
1% is a lot of money. So if we did,
it is.
We don't get you. So in this scenario, that's $1,539 here. Okay, write that down.
So he's got to be exact.
Well, no, now I want to be. So this is good, right? You guys can see us working right on the hands, because she's like, "What's the ballpark figure?" I'm like, "Well, my math's not mathing." I don't know who starts saying that. It's throwing me off because I've seen that. Okay, so in that case, when I was what did I say, about 150? So 1,705 minus 1,539, and this does not include taxes and insurance. Okay, my math is like mathing. That's $166. Okay, I was off by $16. So in that scenario, so that'll save you on a $250,000 house about $166 a month. For that first year. Why is that important? Well, and we're buying down. We're doing this as a team, but it's important because, God, I don't have enough time. We believe rates are going to come down within a year, maybe sooner. And so the added benefit to this is our payment protection benefit. So what that basically means that you can take advantage of refinancing with us with no lender fees. So no processing. So that saves you some money there. And in my case, we charge $14.95 processing fee. I mean, we keep our costs down, but you won't pay that. So you can come back, and not pay that fee. So this can get you into a home, get your payment more comfortable, right? This is another reason not to get off the fence, guys. And in the meantime, your property value is going up.
Right.
So it's called our payment advantage program. So it's 1% down, and you guys can still get seller credits. If you want to get seller credit, to cover the closing costs, we got your down payment. I mean, you're not putting down a lot of money here.
That's awesome.
Yeah. Now this is conventional, so you got to have decent credit. The minimum credit score is 620. I would tell you, you're probably going to be better off, and I know my team doesn't like me saying it, probably 660, 680, because the difference is you got to, oh, I forgot to mention that. It's reduced PMI too. So private mortgage insurance, it's reduced. So the reason that I say that is that if you have a lower credit score, the PMI may be a little bit not beneficial to you compared to going to FHA. So it's got to make sense. So that person that was talking about they got good credit scores, that may be a good program for you to buy your house. So I want to give you a little information on that. Hope
that's one of the biggest things I hear. Is I don't
and
have
she just said it. She said, that's awesome. Yep, it is. It's a really cool program. What are you about to say?
No, I said that's one of the biggest things you hear. It's like, oh, I have to put money up for my down payment or for my closing costs. What do I have? So those are things that we can negotiate. Again, creating that plan, even if it's, I've had people reach out to say, I'm looking, possibly in the next year or so. Okay, let's look at it now. I'll send you over to Brian, figure out what the pre-approval is. If you have to work on some things, he can tell you what to work on so we can look at the different plans and make sense. So
put the numbers together, look at it in a year, especially if somebody's paying a ridiculous amount of rent.
Yeah.
So we'll give all our information out in a little bit, but talk about what we're doing in a couple of weeks.
So August 4th through 6th, we are going to have a booth at the Black Women's Expo at McCormick Place. So we would love
yes, they'll let me in, I think.
We would love for you all to come and stop by our booth. So if you have not already, you guys like and follow us on social media because we'll post all the details of our booth number and everything else. So you can stop by and see us. We'll have a giveaway, so you have to come on over and register to get our giveaway. I'm not going to say what it is just yet, but we'll have some time. But we definitely stop through, say hello, bring your questions. We'll give our contact information at the end, but you can certainly DM us too if you have questions or if you want to set up a time to create your personal plan. We're here for it.
Cool. Yeah, that's great. It's at the McCormick Place, right?
Yep, McCormick Place.
Okay, cool. And that's
so it'll be Friday, Saturday, 10 to 6. Friday and Saturday, 10 to 7. Sunday is 11 to 6.
Yep, you still go to church and come by. There's no football seat. The men can't come, right? That's not an excuse. Okay.
They can come. Look, they're selling tickets. You can come. You buy a ticket, you can come. You can also get reduced tickets for the expo at Walgreens. So I think I don't know if it's half off or a certain percent off, but instead of coming down there and paying full price, you can stop at Walgreens, pick up your tickets and get a discount. Come on over and see us.
Cool. So yeah, this has been fun.
It has.
I feel like this hour has gone like
blown by.
Yep. For our first time around, look, and thank you guys for jumping in and asking. It's been at least a year since we've done, about a year, so it's good being back.
I think it's been over a year.
Yeah, has it? The new station I love what Franklin's done. They just won the Stellar Award again for the second year in a row. So congratulations to WBTC Radio and Franklin Morris for taking care of business. Ramon Perry, you guys do a great job. So look, if you find this helpful, I need you guys to tune in. Look, I'm a guy. I need to be loved on. Okay. Not in that way. My wife takes good care. I'm just saying we need to hear from you. So jump in, tune in. We're going to do it every Thursday from 4 to 5 p.m. We'd love for you to tune into our show. So if you're looking to start the home search and let Alita take good care of you, Alita, what's the best way for people to reach you?
There's a couple. So you could call me or text me at 815-782-2147. If you guys are currently watching on Facebook or Instagram, I don't know how you're streaming, you can hit me in the DMs and just send me a message with your information, and I'll set up a time that we can do a quick consultation, kind of walk you through what you need. Cool.
So she's not telling you to have your people call her people and all that stuff. She said call her directly. Again, I'm so grateful for you guys coming in. I'm going to give you my direct office number. It's 630-352-0629. Now, I'm not the only one that answers that call, but the reason I give you that, because a lot of time in meetings or appointments, we open, and so I don't always, I want to make sure someone takes good care of you. But if you do DM me or you text me, I will definitely get to you and take a really good care of you. We value that. I truly believe home ownership, and Alita does too, is one of the biggest steps you make in your life, and biggest decision. And I did say that. I didn't answer that question. So the top 5 decisions you make in your life. So number 1, your decision for Christ. And I'm not ashamed of that. Number 2, your career, I believe, because you usually pick your career before you get married. Number 3, who you decide to be with your spouse, right? Number 4, if you decide to have kids, right? And number 5, I think, is the wealth, is the house building, it's buying a home. And so, I'm sure you can find a couple other things in there, but that's my top 5 decision. And thank you, Leslie. I appreciate you, Franklin. I appreciate you, Corey. But we're so grateful for the opportunity to even do this and educate and get this information out there for people. So call me, 630-352-0629. That's 630-352-0629. And we promise we'll take really good care of you. We always love helping people build wealth through home ownership. So we look forward to seeing you next week. Yes. God bless.
Bless. Good night.
Views made on the preceding program are not those of WVTC Radio, iNetworks Communications, or their financial supporters.
Winning victory through Christ. WVTC Allsip Chicago.